Hey guys, welcome back. Now, in this video, I've got something very important to share. In the next 2 months, we could see one of the last best buying opportunities for crypto ever again. And what's interesting is that there appears to be a convergence of 4-year cycles setting up an amazing buying opportunity. Now, you may be thinking, well, the S&P has been going on an absolute tear and the fear and greed index for stocks is showing extreme greed. So everything is fine, right? Well, pay close attention, as in this video, we got some really important insider information to cover, including why we have to pay attention to what's going on with liquidity right now, then the big divergence taking place in risk assets right now, indicating a big move is coming, and then we'll finish up with why the next 2 months are critical months for crypto and why this just may be the last best buying opportunity. Okay, so first up, if you also follow Raoul Pal, then you'll know his main thesis in his everything code is also focused around liquidity. Well, there's something very interesting going on with liquidity right now. Okay, so starting with this. Now, this was from a video that I did a couple of months back when we covered Raoul Pal's thesis on liquidity. So here we have the Nasdaq and we also have the Fed's balance sheet. And what he was saying is that liquidity is causing prices to go up. And I wasn't fully bought in because although they correlated, it wasn't showing an exact cause, as sometimes you get this divergence where risk assets can be going up, yet the Fed's balance sheet was coming down. So I wasn't fully bought in, as sometimes these two start to separate. But then from there, there's only 2 things that can happen. You're either going to get a crash in risk assets, which brings the two back together, or you're going to get a massive round of money printing, bringing the two back together. So they are certainly correlated. So there's definitely a very important correlation between liquidity and risk assets. Now, this was a recent chart done by Ben Cowan at Into the Cryptoverse. So apologies that it's a bit blurry, but it's a very, very important chart. And it basically shows net liquidity, global net liquidity. So this is the central bank's balance sheet, not just the Fed, but also China, UK, Australia, Europe. So it's global net liquidity, and this is the S&P 500. And as you can see, it's been very, very correlated, and as money was getting sucked out the system, it also came down. But the important point is what is going on right now. And what's going on right now is very, very interesting. You've got stocks, risk assets going on an absolute tear, and you've got liquidity, the central bank's balance sheet, coming down. And remember, only 2 things can happen. We either have to get a massive round of money printing, or risk assets have to come down. And he also showed if you just divide the two, net liquidity and the S&P, then you get this. And it's another great chart showing that it's just cyclical, like many, many other things. And obviously the red zone, red equals danger, right? So it came near it here, came near it here. COVID was a very big high, and we've now entered it right now. So this is a bit of a red flag. So what do we think is going to happen? Is there going to be a drop in risk assets or another round of money printing? Well, check this out. So then what Ben did was he put together the S&P 500, this is what it's doing right now, and he compared it against the last few pre-election years. So this is what happened every 4 years, the year before the US election. And basically, what it's showing is that around this time and for the next 2 months, so this is August and September, there's pretty much always been a correction, a drop. It happened 4 years ago, it happened 8 years ago, and then check out this chart. So this is a beautiful chart. What Ben did was put together all the pre-election years of the S&P 500 going back a couple of decades and put them all into an average. And in pink, this is where we're at right now. And this is all the pre-election years put together in one beautiful line. And it shows that every single time there's been a drop, a correction in the S&P going into August and September. And it just so happens that this has happened every single time in crypto as well. And when the S&P drops 10%, crypto is going to be dropping 20-30%. So just take a minute to fully appreciate this chart. Now, in the corporate world, if you hired an agency to go back and put this data together, you'd be paying tens of thousands of dollars for what you're seeing right now. The data that we're getting in this day and age is amazing. This is the S&P 500, all the pre-election years going back decades put together in one nice average. It's an incredibly simple and useful chart. And if there was ever true insider information, then this is it. And shown another way, so this was data put together by Deutsche Digital Assets from Glassnode from 2010 all the way up to 2023, and it's pretty much showing you the same thing in a different way. It's the seasonality of Bitcoin, the average monthly performance. And what do we clearly see is that there's pretty much a drop in Bitcoin every August and September being worse than August. And what does this mean? It means it's very, very likely there's going to be a drop in stocks and crypto in August, bottoming out in September. And this could very well be the last great buying opportunity for crypto that you will ever see again. So, as you can see, there is an amazing convergence going on with multiple 4-year cycles. We have Bitcoin's 4-year cycle and the halving event coming up next year. According to Raoul Pal, what's actually going on is a 4-year liquidity cycle, which just so happens to line up with Bitcoin's halving event. And then we also have another one as well, the 4-year US presidential cycle, which just so happens to be coming around next year as well. And they're all coming together at the same time. Pretty cool, right? And then the amazing chart created by Ben, where he put together all the 4-year pre-election years of the S&P, and it showed that every single time there is a correction, August, September, and also a bigger drop in crypto every single time. Now, this doesn't mean that this is 100% going to happen, but it does mean that it's very, very likely. And finally, as for action steps, well, it depends on your specific situation. For me, I'll be looking for Bitcoin to drop below 25k, which is a 15% correction, and then I'll be adding a large position. And if you've already taken your max position in crypto, then it's just something to be aware of, and don't get freaked out if everything starts selling off, as it's done this at this time every 4 years. And so likely it's going to be a bumpy 2 months, but potentially one of the last great buying opportunities for crypto ever again. So there you are, guys. Hope you enjoyed. Now let me know your thoughts, questions and comments below. But just remember, we are trying out the new SuperThanks commenting system. In order to get rid of 100% of the comment spam and trading bots, simply use the SuperThanks button below, get your question or comment read and replied to, or if you just want to say thanks. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.